Hello, everyone, and welcome to our webinar, Forerunners in Sustainable Investments, what we can learn from Scandinavian investors. Where I come from, no one knows the difference between Sweden and Switzerland, but luckily today we will find out because we have our Swiss expert, Samuel Baumgartner here, and then also our Swedish or Scandinavian expert here, Balder Vestad, who is the head of our Nordics. So a little housekeeping before we begin. If you have a question, type it into the chat on the side of your screen, and we will get to it at the end. And a little bit about responsAbility. We are a sustainable investment house that specializes in impact investing. That means all of our funds are classified as dark green by the EU. Our investment themes are climate finance, sustainable food and food systems, and also financial inclusion, such as microfinance, investing in small businesses, and exciting fintech projects. So I will hand over to you guys now, and I will jump back in at the end for questions. Over to you.
Wonderful. Thank you very much for the introduction, Stacy. A very warm welcome from my side as well to the audience. I see we have quite a turnout, something like over 30 countries present. Everybody keen and curious to see how the Nordics manage in the sustainable investing world. Maybe also a warm welcome to you, Balder. You've been in this for quite a while. Maybe you could also introduce yourself quickly. What have you been doing? How long have you been doing this? I think it's easiest if you do this yourself.
No, absolutely. Thank you, Samuel, for allowing me to come and talk on this topic. So I've been with responsAbility for a little over 5 years as relationship manager and eventually head of Nordics. So basically talking to Nordic investors about sustainable investment strategies. Prior to that, I was in DNB, which is a large Norwegian bank in corporate banking, doing kind of traditional analysis and relationship management.
Wonderful. So basically a veteran in the business. When we look at the activities that we've been doing as a Swiss fund manager, we obviously have a big backing from Swiss investors on some of the older funds that have been available, and it's we get a lot of support. However, with the newer products, we see a lot more interest and support in the Nordics. But before we actually get started, I understand that you, Balder, also have a question to the audience to get to know them a bit and see who's actually joining this webinar.
Exactly. I mean, I figure that I would test the audience, how much they know about the Nordic sustainable investment scene. So you see the question already. I did a little bit of research, and according to the Climate Bond Initiative, of total outstanding bonds globally, somewhere between 0.5% and 1% are green outstanding bonds. So the question is, if the Nordics are so sustainable, what is the share of outstanding bonds that are green in the Nordic markets? And you have a couple of options here, and curious to see what people think.
It'll certainly be interesting to see what the audience response will be to this. Maybe while people are looking at answering the poll questions, let's maybe give them a little insight of what a green bond actually is for those who might not be familiar with the term.
Yeah, absolutely. I mean, I don't know how much history we should go into, but it was actually initiated by a bunch of Swedish pension funds. You might remember this, Samuel, but I believe it was in the, what was it, about 10 years ago or so? Maybe a little less.
Sounds about right, yeah.
Yeah, where they, realized this was actually one of the earlier IPCC reports. There was one that came out this year that's hopefully scared a lot of people, but there have been previous ones. And then, a bunch of pension funds decided that, okay, how can we both invest in trying to help solve this problem and also invest in a way where you actually consider the risk inherent in that problem. So they reached out to the World Bank and together they set up the first green bond ever issued by the World Bank and invested by these Swedish pension funds. And of course, I assume people know kind of a traditional bond where a company or a sovereign borrows money, usually for a specific purpose, and then in the green bond case, that specific purpose is some sort of environmentally friendly purpose.
Very good. There we go. Now we got the results.
Yeah.
28%, 48%, almost half say 14%, a little bit less 46%. Surprised about the results?
I mean, I'm pleasantly surprised. The correct answer is 14%. So about half of our audience either knew or had a 25% chance to guess right and got the answer right. I mean, of course, I think we all hope to get to 46% or much higher in the future, but compared to the 0.5%, 1% globally, it shows that at least in certain aspects, the Nordic investor market is quite progressive.
Well, that actually brings me to my first question to you. If basically is financial sense then still more important than sustainability from that aspect?
Yeah, exactly. Yeah. So if I understood your question correctly, kind of what drives the investment decision? Is it to kind of do good, or is it to to make money? And I have to say, as I mentioned, I started here 5.5-ish years ago, came from DNB, traditional corporate banking, and I really expected that the investors I would talk to, I would really have to kind of appeal to their bleeding heart or soft side or all these things. So I've been quite surprised to see actually that it's really been much more about the financial argument when I've talked to investors, and it can basically be two things, or you have some progressive foundations that really kind of sustainability and impact comes first, but mostly you have financial first, and then it's one of two variants. One is kind of, okay, there are external risks in the sustainability challenges that we face, and these external risks we have to consider, so we have to make sure that we invest sustainably. And the other one is the people who kind of see financial upside or opportunity in the global challenges. So I can give maybe two examples there. So in the last 2.5 years, we've issued two bond-like structures, a CLO and a social bond, and kind of Swedish pension giant Alecta has invested in both of them. I think they're above $100 billion AUM. And their CEO, Magnus Billing, he has basically said that any long-term investor who doesn't consider sustainability basically doesn't do his job properly, because when you are investing for the future, you need a market that's functioning, and you need the companies that you are invested into being in stable and sustainable societies. So that's kind of been their take and why they've invested according to their CEO. But then we also see, which I've seen a lot, can take the example of the growing middle class in emerging markets. So we see that, for instance, in Asia, where we invest a lot, there's millions, if not billions, of people coming up this coming decade who are going to try to eat more food out of a food system that is highly inefficient and with lots of bottlenecks. And that is, of course, a sustainability problem, both on the social side and the environmental side. And then, you see investors and the companies who see that, okay, if I invest in companies that can solve these bottlenecks and inefficiencies and produce more food with less or equal inputs, that's not only good for society, but it's a huge financial upside. So I've been quite impressed actually, and you see more and more of the latter, where people kind of see sustainability feeding into the financial argument. So that's been yeah.
A lot of it is also about the timing, whether you are able to make something in the long run work rather than just take the short-term benefit from an investment or an operations. Now, we've mentioned at the very beginning that the Nordic investors, they're very keen, especially on the new product landscape. I would like to start off to look into a bit of it. Where does this actually come from, that there's seemingly a much more perceived focus on sustainability in Nordic investors than what we see in other parts of the world or in other investor groups?
Yeah. No, I mean, I'm sure there's this story isn't kind of black and white. We mentioned the green bond share. That's just one part of the picture. I almost have to kind of preface it by saying that, I come from a country, Norway, where we like to talk a lot about how many electric cars we have and how sustainable we are. But at the same time, most of the kind of wealth amassed over the last few decades has come from the fossil fuel industry. So just to kind of clarify, it's not black and white, and there's nothing kind of intrinsically better, I think, about Nordic investors or Nordic societies. But I was thinking about this question, and I think in the end, it sounds like a boring answer, but it always comes down to incentives. And I think in the Nordic societies, there's 3 features that I thought of that clearly have kind of laid the breeding ground for thinking sustainably, not only in investments, but also in investments. So, I want to highlight transparency and engagement, and then maybe also village mentality. So if you allow me a couple of minutes, I'll address them one by one. So what I mean by transparency is that, the Nordic societies are extremely open and egalitarian societies. And they're open in the sense that information about companies and public entities and even individuals is very freely available. So, I mean, I think coming from a Swiss context, this is probably, a bit surprising, but in the Nordics, you can basically ask to see what any politician has written in his emails to other entities. You can get to see what, pension funds and other corporates have invested in, down to single assets. And I can even, right now as we speak, I could look at the attendee list, and I could look up what somebody from Norway made last year, both in income and how much they paid in tax. And, to any Norwegians on the line, don't worry, I won't do that. But it's an extremely transparent society. And I think, if you look at Transparency International and their, corruption perception index, which is a proxy in a way of transparency, the Nordic countries are always, in the top there. I think I checked the 4 big Nordic countries are top 7 this year. And it basically means that the Nordics is a region where it's extremely hard to hide any skeletons in your closet. And that, of course, creates an incentive to really think about your actions, be it, individual or corporate or as an investor. And of course, it also incentivizes you to then wanting to exclude bad things and consider, potentially investing in good things. And then secondly, engagement, which also kind of comes from the transparency element, but because it's an open and egalitarian society with quite a big public sector, a lot of people kind of engage in, if you take the Norwegian example, so what does a Norwegian sovereign wealth fund invest in? Because they basically manage, the future pension of me and my kids and my future grandkids and all that stuff. So basically, weekly, if not daily, you'll see discussions on what are companies investing in, what is Equinor doing as an oil company that's partly owned by the public, what is SAS doing that is an airline partly owned by the 3 Scandinavian countries. So you have a lot of engagement there, and there's a lot of public pressure. So, again, this example is Norwegian, but the Norwegian Sovereign Wealth Fund, there's continuous discussion on what they should not invest in, and then also, what they should invest in, pressure to invest in greener things and more global things and these type of things. So again, back to incentives, that creates an incentive to try to get your act together, and then also some pressure to, do the right thing. And then lastly, the village mentality. That's, all the 4 big Nordic countries are still small countries, and as I said, they're quite open. So there's really that kind of notion, to do what is good for its society, not necessarily for the individual, which I'm not saying is only a good thing, but if you take the founder of IKEA, who's one of the richest men in the world, he's celebrated for the fact that he doesn't have private planes, he doesn't own islands in the Pacific, but he lives in a modest house and wears cheap clothes. That's kind of what we aspire to. And then you're supposed to pay your taxes with joy, and all this kind of pressure to like take part in society. And there's even a Danish author who wrote the Law of Jante, which basically says that you should not believe you're special, you're not better than anyone else, etc. So this is a bit into kind of sociology, but I think it definitely impacts us in the sense that there is a pressure to do what is good for society also as an investor, and there is the kind of negative pressure that people judge you if you do stuff that's more for the individual than for the greater good. So I think transparency, engagement, and village mentality definitely play a part. And then as I try to highlight, I think it all just creates incentives, and humans react to incentives, and that's kind of been a driver.
Sure. So with these foundations, I mean, these are a definition of values, and you mentioned the law of Janta, for example, the habit of engagement. How does then this also work? You know, the whole interaction of society and finance. You've mentioned a bit the public discussion, but are there other examples, for example, of how people interact with their finances? I know, for example, here in Switzerland, finance is something that people don't discuss. They don't make decisions. It's often ought to be something that belongs to the rich or is a topic of people with money. How is that perceived in the Nordic countries?
Yes, we have the same discussion in the Nordics, as far as I can see, at least. You know, are people talking enough about this? Are people kind of aware enough of what their money goes to? But as you know, as you touched on, there is definitely that discussion, because information, you know, is available on what people actually do place their money in. And then, you know, I think there's still aspirations to do more of it. I think there's still, you know, people talk about we need more personal finance in schools, and we need to kind of get people to understand and care more about their pensions before they turn 60. Like, I think, you know, we all can be at fault of doing. But I think the openness and the transparency kind of helps a little bit. You know, just as an example, mostly if you kind of want to negotiate your salary, you're allowed to see what your colleagues make and the, you know, the average across the team and stuff. So the foundation is there, but I still think we have a way to go in terms of having that be not taboo, you know.
Mm-hmm. Okay, and yeah, and I think in the same way in this mentality, I guess the mentality, the sustainable mentality, does end up going quite a chunk further than in other places, no?
Yeah, I mean, like, you know, I said, I think the driving causes that I mentioned, I think they go not only on investments, but they go on other topics. And, you know, actually preparing for this webinar, I realized that the term sustainable development was actually coined by former Norwegian Prime Minister Gro Harlem Brundtland back in the 80s, which is also quite shocking, you know, that 25 years ago, this wasn't even a term, and now, you know, it's what everyone cares about. But yes, I mean, I think those driving forces lead to a lot of things, be it, you know, recycling, or be it, yeah, going away from fossil fuels. But again, you know, back to incentives, not to go too deep on that, but I think the Norwegian discussion around oil, for instance, is an interesting example, because yes, we'd like to kind of say that we are so sustainable and, you know, green and all these things. At the same time, when people then say, okay, but why don't you, you know, stop drilling oil, then we're kind of like, well, it is, you know, it is highly lucrative, and, you know, so I, you know, going back to it, I think incentives more than anything is the driving force. And I think, you know, the discussion around oil in Norway and the fact that we still do it is an example of that.
And I think that's one of the key issues that many investors face, of where you actually draw the line. You know, letting go old known habits and adapting new ones. And with that, we would also like to know from the audience in our second poll question of the day, how often do you talk about finance and sustainability? And I think one of the things that we very often see is what we've mentioned before, is that, for example, here in Switzerland, there is a lack of habit of talking about finance. The sustainability component is very omnipresent. But I also think starting to talk about it is kind of, it's almost like sports. It's an exercise. It's something you need to practice. And I think from what you've been saying now, Balder, and correct me if I say that wrong, the Nordics do have a more fit habit of that talking part.
Yeah, I mean, it would, I don't think we have the technology for that, but it would be interesting to see, you know, these answers broken down on where people come from. Because as I said, I still think we have a way to go, even though we talk a lot about it on kind of the institutional level. The personal level is there's still growth to be made.
Certainly, and I think also their financial institutions have a role to play to kind of bridge this information between the investors looking for investment solutions and making them available. We've gotten the results in, so we have a very active audience, so I would say a very well-trained audience already, with about 70% of the participants talking frequently about finance and sustainability. And we have a low group that has not talked about finance nor sustainability. And we're also seeing that there's a group that has a bit more of a focus on sustainability rather than finance. I think we will definitely spend some time looking at the places where the participants are from. But I think I'm to be honest a bit surprised that there is a high turnout looking to talk about sustainability and finance. I would have expected to be a bit more focused on the sustainability part. What's your comment on this?
Yeah, I fully agree. I mean, I guess scientists might complain about selection bias here. You know, we obviously have a very aware crowd, both in terms of finance in itself, but especially sustainable finance. But it's, yeah, hopefully, you know, it's a sign of a discussion to come more in the future.
Very good. We're coming to the end. So from you, Balder, as a sort of closing remark, could you tell our audience one of the key questions or the answer to one of the key questions from this webinar? So what can we actually learn from the Nordics, and can the Nordics stay in the lead, or will we catch up?
Yeah, exactly. Because, you know, I went kind of deep into kind of Nordic societal mentality and all these things. And I don't think if you're an investor coming from another country, that's really something you should or could aspire to mimic. You know, I don't suggest that anyone start digging up oil to then feel guilty to then start incentivizing electric cars. Nor do I incentivize anybody to adopt this law of Jante, where, you know, you're not supposed to believe you're anything. But what I do think, you know, you can learn, and what I do find interesting after, you know, working on this specifically for more than 5 years, is the fact that most investors, both private and institutional, come at this from a financial angle. And, you know, the most eager ones I've seen have been the really big, you know, quote unquote, boring institutional investors who really think that, you know, this is a way that they can not only protect their investments, but also see an upside in it. And, you know, I saw the same on the private level. I saw Nordic bank Nordea, they've asked almost all of their private clients how important sustainability is in terms of their financial asset management. And I think about 50% of the private banking clients, so the high net worth individuals, said it was very important. 25% of the personal banking clients, so, you know, kind of people like you and me, normal people, said it was very important. And I thought it was interesting because I think you have this image of sustainability and maybe even sustainable finance as kind of a field for the, you know, slightly more hippie leaning people, you know, that it's either for people who really just, you know, care about the world being a better place, or even from people who don't have the money to invest but just complain that other people should do it. But then, you know, my anecdotal experience and backed up by, you know, some of these data points is really that it's the financially savvy people who really care about it. And I hope and I think that can be inspirational to other investors too, that, you know, you can go into this and find opportunities that make financial sense just as much as sustainable sense. And then your other question, sorry, what was that again?
Will the rest of the world catch up, or can the Nordics stay in the lead in sustainable investing and sustainability?
Yeah, I mean, as I said, you know, with it all coming down to incentives, and then, you know, hopefully maybe the Nordics can be a bit of a role model, and then, you know, you get more and more incentives globally too through stuff like, you know, the coming EU taxonomy and SFDR and all these things that I know you've talked about before. So at least, let me put it this way, I don't see why the Nordics should be kind of in the lead in the long run. I don't think there's anything that makes us better than others, and other financial hubs are much bigger. So, you know, I think just like Switzerland was and has always been a leader in the specific topic of microfinance, I think, you know, Swiss investors, American investors, UK investors, and, you know, when they really come onto the scene, I expect them to dwarf the Nordic investor community. And you kind of hope so, because you need more people to move that way.
And I think it's an aspiration to be able to catch up. I think that's for the better of the whole world. And with that, I would like to wrap up. I would like to thank you, Balder, very much for participating. And I would like to open the floor for questions if there are any.
Yes, here we go. First of all, how are Scandinavian institutional investors faring in terms of returns? What are the returns like in comparison internationally?
Good question, as one says when you don't have the answer right in front of you. But I know that, for instance, there is a Danish foundation called the One Initiative who did a survey among institutional private equity investors, and they asked about their kind of relation to impacts, which, you know, in sustainable investing is probably one of the more progressive kind of pockets of sustainable investing, if you will. And there, I believe the numbers were so that 80% of private equity investors thought that impact presented an opportunity for outsized financial returns. And of the ones that had already done impact, 60% said that it either met or exceeded their financial expectations. So I mean, that's more survey based than kind of, you know, back-looking data tracking. But I also know, because, you know, when you work in this, you read a lot about this. There was a new report, and I'm happy to share this with the audience after the webinar. There was a new report written by New York University Stern, where they basically looked at all these studies that tried to look at ESG and returns, and, you know, whether there is a positive correlation. And they found statistically significant, so this was a meta study, they found a statistically significant correlation, and this study was published this summer. And they also saw that that correlation grew in time. So the last 5 years, the correlation was stronger. So, you know, you can hope that that means that sustainable investors also have gotten more savvy and able to kind of pick the right companies, if you will.
Great. Next, how has the current greenwashing crisis, for instance, with DWS and BlackRock, affected investor appetite?
Yeah, I don't know if, but from a Nordic perspective, I think there is definitely that discussion. I had a discussion with the Norwegian pension fund 2 weeks ago, where she asked, we were talking about a specific fund, and she asked if, you know, would this be classified as kind of dark green, light green, or none of the above, according to the new EU regulation SFTR. And I told her that it would be dark green, and she said that that was good news, and that she was quite disappointed to see that some of the bigger traditional asset managers had barely classified any of their funds as so-called dark green or Article 9. So I think there is more of an awareness around it, but I also do think that this upcoming regulation should hopefully kind of separate the wheat from the chaff.
Yeah, I think I can second that. I think also the questions that we get in discussions with investors are focusing more and more around transparency and reporting and data collection and so on. That I think the investors are also getting more savvy, but I think demand is still pretty strong. What's shifted a bit is the focus of attention.
Another question about investors. Are there specific sectors within impact and sustainable finance in which Scandinavian investors are particularly interested?
Good question. I mean, what I've seen from, I mean, it's anecdotal, but it's also, you know, it is 5 years and we have fundraised quite a bit, is that private equity as an asset class seemed to be more household maybe among Nordic investors than it is among some other European investors, at least. In terms of sectors, I mean, we touched upon this, but you know, responsAbility is basically a testament to the kind of sustainable orientation of Swiss investors in a way when it started in 2003, and really, you know, has built quite a large AUM, largely from Swiss investors, and that is in microfinance. And I find that, you know, there's a mix. Some people still see that as very attractive, but some people are looking more towards climate and to a certain extent more towards the kind of food, agri-sustainable food space. But if I had to pick two, I would say private equity as an asset class, and then anything related to climate is very, very attractive.
Mm-hmm. And how did impact or sustainable investments fare during COVID?
Yeah, I mean, you guys are just as suited as me to respond to that. I don't know if you want to have a crack, Samuel.
Yeah, sure. I mean, I think one of the big differences when looking at prior crises to COVID, for example, the 2008 crisis, we see very clearly that COVID is a crisis that affects the real economy. So that's something that's not a financial market driver in that sense. So we've definitely, for example, in the funds that we manage, we've definitely seen certain scars or certain effects in the investment solutions. However, if you compare that with, for example, some of the listed developed market investments, I would say the hit has been a lot less, partially due to liquidity, but also partially due to the underlying assets and how they are developing. So I think, you know, the immediate effect is definitely visible, but I think also the recovery on that side and the absolute effect is probably lower. And I think across the board, you see that also in other sustainable investment solutions. And I think that's one of the factors where also comes in the way you do the risk management, right? You mentioned that earlier in the webinar, that considering sustainability components in the selection of certain portfolio positions, you also expand your way that you look at risk. And you're so to say de-risking the portfolio, which then should have in the long run a lesser impact, which has also been seen during the COVID times. I don't know if there's anything you'd like to add, Balder.
No, I think that's kind of summarizes my view of it too, yeah.
All right, I'll take one last question and then we'll wrap up. So how are Swiss pension funds in comparison to Scandinavian pension funds when it comes in terms of sustainable investing? Samuel, this is probably for you.
I mean, I can speak for the Swiss. Maybe then Balder already gave us a little bit of an insight during the webinar. What we see here, there's still a lot of constraints and kind of lack of desire to move in general into new investment opportunities. A lot of it is driven by regulatory constraints that the pension funds have to work under to mitigate risk. But I think especially when it comes to considering sustainable solutions, I would say compared to the Nordics, the Swiss pension funds are quite a substantial amount behind in the mentality, in the selection, and in the approach as well.
All right, well, I hope that changes soon. That's the end of our webinar. Thanks for attending, everyone. Check us out on LinkedIn, and you're always welcome to contact Samuel and Balder directly if you have more questions. All right, hope to see you next time. Bye, everyone.
Thank you.
Bye-bye. Thank you.